Hello and welcome to BQ Prime. I'm Hiral Daria. Joining us on the show today is Tarun Sawhney, Vice Chairman and Managing Director at Triveni Engineering, joining in. Welcome to the show, Tarun, and a pleasure to speak to you.
Thank you very much. Pleasure to be here.
Tarun, overall, in terms of the numbers, clearly we have seen a growth that has come in terms of the top line, and that's mainly been driven by the export number that we've seen in terms of sugar, as well as the higher ethanol sales that we've seen as well during the quarter. Overall, has the quarter actually met your internal expectations?
Thank you. Excellent question. Yes, it has been a quarter of growth for the company. And as you know, we have two broad lines. We have the agricultural line, which is sugar and ethanol, and then we have the engineering line. Starting from the smallest, the engineering business has done very well, both from a top line perspective as well as from a bottom line perspective. In fact, it has surpassed our own internal expectations. The ethanol business, if I come back to that, has done well. The 660 KLPD capacity that we have in place, two distilleries were commissioned earlier on at the very beginning of this fiscal year, are on stream, functioning at near top capacity. And as a result, we've seen an enhancement of revenues in our distillery business, along with profitability, added profitability from that business segment. On the sugar side, it's been a mixed bag. The exports have been a welcome addition. So the profitability from sugar exports, the higher realization, we've had over 41 rupees per kilo realization for the exports that we recognized. So we received a quota of 205,000 tons of exports. We exported approximately 135,000 tons, which included the sale of about 75,000, and the balance was physical exports. That happened in the quarter under review. And that was at a price of 40 rupees 40 paise per kilo, versus our realization of sugar, which was just about 36 rupees per kilo for what was sold domestically. Now, the sugar that was sold domestically was produced actually in the last season at a higher cost of production because sugarcane prices had gone up. And the sugar prices had not gone up commensurately, and therefore you had some form of margin constriction that happened, and that is you can see it in the quarterly numbers where the margins are slightly lower. So I think broadly excellent quarter. One small, of course, blimp, that sugar prices did not rise sufficiently domestically.
Right, an interesting point that you made in terms of the margin front, that yes, higher sugarcane prices have actually impacted the gross margins. Additionally, the employee cost has also gone up during the quarter, as well as the operational cost also has been higher, which is impacting, the EBITDA margins overall. So are we expecting to see a normalized range from the coming quarter? And if yes, what would that range actually look like?
No, I think that is just because we started the sugar season a little bit earlier. So, we have a large amount of seasonal workforce, and depending on when you start the sugar season, it has an impact in terms of those, in terms of employee costs for the whole company. This sugar season started, 10 days, 12 days earlier than last year, and therefore the costs are higher. But otherwise, over a normalized 12-month period, I don't see costs going up by anything more than normal.
Okay. And what is the normalized margin range that we're expecting going ahead, taking into consideration, how sugarcane and sugar prices are now panning out?
Right. So, our margin from our sugar business fell to about 13%. The corresponding quarter in the previous year was about 17%. When I look forward, we don't typically give forward-looking estimates, but I would be happy with this margin the sugar margin coming in at around 15% going forward for Q4 and beyond. I do believe that is possible because I think sugar prices have been unduly low. They're given the balance sheet position of the country, given the fact that we've got a resounding export program that is in place, given the fact that the central government, DFPD, the Department of Food and Public Distribution, actually looks at this sector very proactively. I do see that the prices that are prevalent right now as a little bit of an anomaly. And as the next few months transpire, prices will rise, and therefore we will have normalized margins of around 15% coming back, within just the
Mm.
sugar business.
Right. Apart from that, overall, if you see in terms of ethanol blending as well, where are we overall? How are you seeing? Because yes, ethanol from grain is something which has impacted the performance overall as well. So how are you seeing that entire saga play out?
It's very interesting. I mean, last year we had a huge achievement as a nation of passing 10% ethanol blending. As of the 1st of January, we're well past the 10% blend mark. The government has laid out its plan to have a 12% blend for this year. And as we embark upon that ambitious target, I think both ethanol manufactured from the sugarcane route, which could be from juice or molasses, etc., or ethanol manufactured from the grain route will both have an important role to play. My personal view is that ethanol from the sugarcane sector will be far higher, maybe about 75% of the ethanol that is consumed in the country, potentially even more. And grain will be, of course, that much lower. Going forward, I would like to see that as the case. I do believe that the reliable supply of ethanol will certainly be only from the sugar sector. I think grain has its
Mm.
idiosyncrasies there are different supply and demand issues on that front, and so I believe from a longer term sustainable basis you need to have the vast majority of ethanol supply coming from the sugarcane sector.
Right. And overall, if you see in the current quarter as well, there have been concerns so far in terms of sugar recoveries, but the anticipation is that it will pick up, once the season progresses. How are you viewing that side of it?
Excellent question. The late rains that we had did have a detrimental impact on recoveries. It did impact the grand growth period.
Mm.
Sugarcane has something called a grand growth period where the sucrose content increases. It did have an impact on that, and we've seen that in terms of a reduction in recoveries in North India for the ratoon crop. Now, sugarcane comes in two forms. You have the ratoon crop and you have the plant crop. And plant crop
Mm.
is typically supplied from the beginning of February until the end of the crushing season. Our laboratories, at least as far as where the Triveni sugar factories are, and our farmers are concerned, report that there's going to be a reasonable increase in the sugar recoveries from plant grain. So we hope that there will be a substantial catch-up that will be played by Triveni during the remainder of this season. And we hope that we will be very close to the recovery number that we had last year. So no appreciable drop or no appreciable gain compared to the sugar recoveries for the previous crushing season.
Right. Apart from that, from an export quota perspective, what is being awaited from the government now? What's your anticipation? Because that's something that everyone's watching out for as well.
A great question. I mean, if one looks at the sugar balance sheet,
Mm.
Triveni has declared, post our board meeting, has declared its numbers for the projected balance sheet, where we're looking at a net sugar value of 35 million tons. And therefore, we believe that the government should export another 1 million tons. There should be a second tranche of exports of about 1 million tons, and that should happen sooner rather than later, because you have international sugar prices at a reasonable, they're off their lows, but they're still at a reasonably high level, and therefore Indian exports will be eagerly accepted by global markets. I believe that 1 million tons worth of exports would be more than enough, and we would be able to maintain the supply and demand position that the government wants, and certainly that the industry wants. So my expectation is that that decision be taken sooner rather than later. I think we're waiting for the midpoint of the year when we can truly assess the quantum of sugar, the net sugar that will be produced by the country. And I think there's a growing consensus around the 35 million metric ton mark.
Right. And overall, Tarun, what's the plan in terms of Capex? Because we've already made a Capex announcement now.
Correct. So in the most recent board meeting yesterday, the board announced a Capex of 190 crores, 90 crores of sugar Capex. This is going to convert one of the factories from plantation white to a refinery. Today, we are already at 60% of our sugar production is refined sugar. That will obviously rise next year. The remainder of that Capex will be spent on efficiency improvement and modernization that will allow us to lower our cost of production and enhance our margins. In addition to that, the power transmission business has received a capex of about 100 crores. This is in addition to the 80 crores that the business received last year, where two things will happen. Number one, a brand new facility will be set up for gear manufacture and the machinery, tooling, etc., for our defense facility, which is a separate facility. That's the funding for that. The total cumulative funding is 100 crores that has been declared by the board yesterday. I would like to mention that in the previous board meeting, 3 months ago, the board also announced a 460 crore capex, two new distilleries, dual feed distilleries, both on the molasses stream and on the
feedstock,
exactly.
grain-based, yeah.
Right.
Right. So on the previous expansion capex that we're talking about as well on the distillery front, what's the execution plan on that side?
Right. So the sugar and engineering capex that was declared several quarters ago, that's all complete. That's all happened. The sugar side, we're seeing the result in terms of 25% additional crush during the quarter under review. So that's all done. On the power transmission side, the land has been acquired, etc., and that was the capex. The new base and the office is all in place pretty much. As far as the two new distillery projects are concerned, we're in the process of getting environmental clearances, and post that, we will certainly start placing the orders for execution. We're hoping that the first of the two distilleries will be operable by February of 2024. So in about 12 or 13 months' time from today for the first distillery, and the second one soon thereafter. So that's the kind of stage where things are at. The 190 crores of capex that was announced yesterday, that should the power transmission capex will be complete through the next fiscal year, but the capex for sugar will be complete by October, well in time for the start of the next sugar.
Right. And overall, what's the outlook in terms of FY24 and 25 looking like, and what's the next milestone that we're looking to cross as a company?
So, it's that's an interesting question because there's so much happening. Every quarter we're announcing new capexes. Particularly the business is not growing in just one direction. In fact, we have multiple businesses and all the businesses are growing. So there's actually capital infusion across the businesses in various forms, differing amounts, but across all of them. So there's great promise actually that we have across the sector. So over the next couple of years, I think the expectation should be for excellent results, bigger and better and bolder, better numbers, bigger numbers, because we're going to see top line certainly being enhanced with all of these capexes, and it will not be at the expense of margin erosion. So that is, of course, the management team is very cognizant of the margins that we have in the business, and that growth should not be at a consequence to margins. And we're expecting that margins will remain the same over a medium-term perspective.
Right. And how are we funding the capex plan? Is it through internal accruals, or there will be some amount of debt portion to it?
So the sugar and power transmission business capex will all be through internal accruals. The distillery capex that I had mentioned, a portion of that will be debt. It's important to mention that debt comes from a Government of India scheme, so it will be under interest subvention. So it's always worthwhile taking that. The rest, of course, the financial position of the company is pretty good, and therefore we will meet all of these expansions through internal accruals. At this particular point in time, we have 1,275 crores of funds in fixed deposits.
Right. And very lastly, Tarun, from the different businesses that we have, from sugar to ethanol to, the engineering side of it as well, going ahead, seeing the way capex is being put out, which segments actually will be the growth drivers for the company?
I think that all the segments are doing rather well. So, within engineering, water and power transmission is growing quite substantially. I think the ethanol sector holds enormous promise. We've achieved 10% blending. The milestone for 25-26 that the Honorable Prime Minister set is 20%. So there's quite a lot of capex that's required at the national level. Sugar will be only balancing small quantums, I think. So I think the real growth is coming from engineering as well as from the distillery sector. From the sugar sector, it will be a feedstock. It will be a supplier into that distillery sector. So we're actually spending a lot of time, a lot of energy, a lot of funds in terms of enhancing the quantum of cane, ensuring that productivity levels of the farmers that are associated with Triveni go up substantially. And that will help us feed the distillery business and, of course, produce more sugar as well. So the short answer, of course, is that I'm seeing growth across all the business segments of the company.
Right. All right, Tarun, thank you so much for speaking to us on the show at Beacon Prime. And thank you for the candid conversation as well. Good luck for the coming quarters. Thank you. Stay safe and speak to you soon again.
Much appreciated. Thanks very much.